S&P 6,000, Nasdaq 20,000, Dow 45,000, and of course, Bitcoin 100,000. We've seen a lot of big round numbers fall in 2024, not just in stocks, but other assets too. What's happening behind the curtain? Is this advance healthy or frothy? After 2 years of 20% plus gains in the S&P, we do it again in 25? Is it time to batten down the hatches? Today, you're going to get answers to questions like those from a guest I'm pleased to welcome back to the Money Show MoneyMasters Podcast. He's David Keller, President and Chief Strategist at Sierra Alpha Research. Dave, thanks for hopping on the show.
Yeah, it's good to see you again, Mike. Thanks for having me on.
Yeah, it's funny. I was looking back. I haven't had you on since March, which has definitely been too long. Some things have changed and some things haven't. But I want to start with Sierra Alpha Research, your new venture here. What is it and what is it you're doing?
Yeah, so my career has taken me to a number of different places, from Bloomberg in New York, from Fidelity up in Boston, stock charts in the Seattle area, and I'm really excited to draw on those experiences and really just try to help individual investors and financial advisors improve their decision making. And having worked with money managers, running $100+ billion funds and working with individual investors running couple $1,000s in their portfolio, they make the same behavioral mistakes. And I found that technical analysis provides a really good structured approach, if done correctly, to help you minimize those behavioral bumps and focus more on opportunities and using discipline in your decision-making process. Sierra Alpha Research is really to help people learn about the markets, improve their market awareness, improve their understanding of what's going on using technical analysis.
Great. Glad to hear it. Best of luck to you with the new venture.
Thank you.
Obviously, as we're talking here, market, like I mentioned, we're hitting all these milestones. We've seen it in multiple asset classes. So what are your thoughts on this market? Where do you think we stand here in mid-December 2024?
Yeah, so Q4 of 2024 is following, really almost, at least at the end of the year, is really following the seasonal playbook really well. You don't have to look that far back. Look to 2020, which is the last election year. Now we are coming out of the, sort of COVID experience there, but you still had that nice rally in November and December after the election day. And in an election year, between election day and year end, you almost always have a period of strength. And so I'm not surprised that we're seeing the resilient strength that we are here in Q4. I think the real challenge is what happens in Q1 of next year, which is once the euphoria of that post-election rally is worn off, sort of what's next. And that's where I think investors will have to focus a lot on, a new administration, obviously could be a lot of policy changes, different tailwinds and headwinds than what we've been experiencing. So, at this point, the market is going up, and that on its own is very, very bullish. Yeah. For me, when the market's in an uptrend, I think of things as innocent until proven guilty. So I'm always looking for signs that, the market is taking on a guilty vibe, and that those sort of opportunities, those sort of signs of deterioration are what I'd be looking for here.
Okay. If I roll back the clock to mid-year and maybe even a little bit before, we started to see some of that rotation. The big tech thing that was dominating everything, Mag 7, we all know about that. That was starting to give way to small caps and some other sectors. And then kind of, I know recently on X you mentioned, here we are back to big tech world. So how do you think that's going to play out?
We've come full circle back to like the beginning of the year, right? When it was sort of the Magnificent Seven and then everything else, right? And you're finding that particularly now, where stocks like Alphabet, breaking out, gapping higher, Meta breaking above $600, Apple, others all having these, Tesla for sure having nice runs. The reality is that breadth indicators are actually going a lot weaker here, right? So, end of September, I think it was 90% of the S&P members above their 50-day moving average. Now it's down almost to 50%. So, more and more stocks are breaking down below their 50-day moving average. But the biggest names are strong enough that it's allowing the benchmarks to look arguably a lot stronger than I guess they really are. And you saw the same thing like in January and February of 2024, where the market rallied. A lot of stocks were actually not particularly strong, but the biggest names, the mega cap growth names, were so strong, it sort of compensated for that. The danger sign is where you start to see profit taking in those big mega cap names, which is why, as always, I think they're the most important charts to follow. Strength in Apple, strength in Meta, strength in Nvidia, strength in Tesla goes a long way to making the S&P and the Nasdaq looking remarkably strong. Weakness in those charts, Nvidia breaking down below support, which is a possibility. Those would be warning signs I would be looking for. But for now, it's sort of offense over defense. Conditions are still pretty good.
And I noticed you mentioned too the bullish percent index on the S&P. I think it just dropped back below 70%, right? What's the significance of that potentially?
Yeah, so in a healthy bull market phase, you obviously, or I guess intuitively would think you have a lot of stocks going higher. And so the bullish percent index is a market breadth indicator based on point and figure charts, which is a classic sort of charting methodology. And so we have indicators called the bullish percent indexes that literally quantify what percent of a certain universe are in a bullish phase. And what I found is when that indicator gets above 70%, that sort of signifies that things are working. Most stocks are going up. There are a lot of positive trends out there. And so as a result, conditions are probably pretty constructive. What you look for in an extended bull market like we're experiencing now, you look for signs that that's changing, or what I call a change of character. So the bullish percent index coming back below 70% has often happened at major tops because all of those stocks are going higher. All of a sudden, you have some initial profit taking on some of the names that have been going up. They start to break down. Eventually, that distribution really starts to weigh on the market as a whole. So it's not 100% effective. I wish things were more than they are sometimes, but really, if you look at major tops, it's had this sort of configuration. So I think between now and going into January, those would be the danger signs I would be looking for. Signs that confirm the market has been overextended here in December, starting to change going into January. That could set us up for a maybe rockier Q1 than I think a lot of people would want to think.
Got it. Let me ask you about another key sector, the financials. I mean, I've always kind of followed them in what's going on in the credit markets for sort of an early warning sign. And the fact that we've had participation there, is that bullish? What are your thoughts on that?
Yeah, so the financial sector earlier in the year, boy, talk about a place you didn't want to be. But in the last 6 months, I mean, the second half of the year really started to emerge. I think that's really sort of a forward-looking sort of move, anticipating further rate cuts. We have, one more December Fed meeting now coming up in 2024, and then it'll be all about looking forward to the pace of rate cuts into the beginning of next year. A steeper yield curve, which would mean the short end of the curve comes down, the long end remains around current levels. That steeper yield curve is usually a really good environment for financials because that's essentially how a regional bank makes money based on the steepness of the yield curve. So it's not been a great environment for financial companies, generally speaking, because the yield curve has been inverted for so long. It's now starting to normalize. And I would say going into 2025, that's one of the key emerging themes. If financials do better, by the way, small caps probably a really good place to be. They're a much bigger weight than in the large cap indexes like the S&P or the Nasdaq. So I would not be surprised if financials sort of reemerge in a position of strength. Small caps, which are doing better on an absolute basis, I wouldn't be surprised if they start to improve on a relative basis as well.
Okay. I've got to ask about the technicals and some of these alternative assets, Bitcoin, gold, and so on. I mean, what are your thoughts there? Obviously, we kind of had the blow-off move in gold, a big correction after the election. Bitcoin has just kind of kept running after the election. I'm curious about your thoughts as we head into 25.
I feel like when people write books about 2024, there will be the period before the election and then the period after. I mean, talk about a pivotal moment and so many things had a certain look and feel up until early November and then have dramatically changed. And things that come to mind. Gold, I mean, for much of the year, and I remember at Money Shows earlier in the year, we talked about the strength in gold and how it was outperforming the S&P and the Nasdaq for most of 2024. That's only changed in the last month or two, right? When you've seen gold come back a bit while the major indexes have gone higher. But gold has been a remarkably strong trade. It's retraced quite a bit. Now I would say if you look at the GLD, for example, it's kind of range bound and very close to actually breaking out to a new swing high. So I would say with something like that, re-exerting an upward phase by breaking out on stronger momentum would be an interesting, sign that there could be further upside to be had there. I would say with cryptocurrencies, you have Bitcoin, you have Ethereum trading up against major big round number resistance, right? So Bitcoin, it's 100,000, which is obviously a key psychological level. With Ethereum, it's 4,000. And so when these things hit these big numbers, I'm not surprised recognizing the pullbacks that we've experienced in both of those. The long-term trends, though, are still quite strong. And so I would say with Bitcoin breaking above 100,000 and holding that breakout would be a very bullish development. The same with Ether prices. They've chopped around as they've tested previous resistance, but both of those are actually setting up quite well going into the beginning of next year. A lot of that is sort of a tailwind, I think, implied by the Trump administration, by Elon Musk being more involved, et cetera, et cetera. But for me, it's all about the charts. And as long as the chart is going up, I'm going to want to own things like that. And so Bitcoin, Ethereum, and some of the other top coins, I think, pretty attractive here.
Okay. Any other stock sectors that I haven't mentioned that either look particularly bullish to you here or particularly bearish as we head into the end of the month and the end of the year?
Yeah, no, thanks for asking, Mike. I think, to be honest with you, the most important chart we haven't talked about yet, I would say, would be the performance of the defensive sectors. There have been times here recently where it's looked like things like utilities or consumer staples or real estate have started to improve.
Yeah.
And it's not really materialized. And just more recently, you're seeing technology go up and those defensive sectors really starting to underperform just in the last month or so. But I would say going into the beginning of next year, if you're concerned about the sustainability of this uptrend, one of the great tells that a major top is probably happening are those defensive sectors start to improve, particularly on a relative basis, meaning the ratio of the XLU or the XLP versus the S&P 500 starts to improve. When a market has had a sustained rally and then institutional investors want to get a little more defensive, they'll often rotate to those sectors like utilities, real estate. So for now, I'm not seeing a warning sign yet, but that's top of my list of charts to watch for a potential warning sign going into Q1.
Okay. I want to pivot away from the market action, just talk a little bit more of kind of your education, your philosophical approach to this market. I mean, you talk about a lot about what mindful investors should do or shouldn't do. I was curious if you can expand on that point at all.
Yeah, for sure. I mean, I my own experience personally with mindful meditation was transformative. It really helped me recenter and focus on the present and what was happening around me instead of getting just so caught up in the future or caught up in the past. And I have found that applying that sort of mental approach to investing has been really rewarding for me and for a lot of my premium members as well. So we talk about mindful investing. It's having a good process for understanding what's happening around us, what I call a good market awareness. So for me, it's having a morning coffee routine. Every morning, I bring up the same set of charts. I go in a consistent checklist and I review all of the key metrics. It's doing a certain thing every week. It's doing a certain thing every month as a way of just reinforcing trends that I'm seeing, recognizing changes and all of that. But it also has to do with, learning from your past mistakes. I think a lot of times a mindless way of going about your process is to ignore mistakes and kind of move on because it's too painful to relive a bad trade. I would argue one of the best things you could do at the end of the year is look back at some of your unsuccessful trades and think about what went wrong, right? What did you miss that you could have done? What did you not read that you could have read? What signals might have helped point you in the right direction? So for me, mindful investing is just having a better, healthier relationship between the present, the past, and that sets you up for success in the future. So that's how mindful investing, I think, is something I think most investors could probably improve on.
Got it. And one other thing I want to ask you about, I mean, you're joining us. We're fortunate enough to have you for the 25 Money Show Traders Expo in Las Vegas this February. Your topic is the 4 deadly sins of investors. So without giving too much away, I mean, what are people going to walk away from that presentation with?
So I actually was coming up with an idea for the presentation. I'm excited to join you guys in Las Vegas in the new year. And I really drew this from an exercise I used to do with money managers I would work with at Fidelity and other large institutions. I would basically draw an idealized chart and talk about some of the mistakes that could be made and think about how they made decisions around different phases, when a stock was going up, when a stock was going down. And what we're going to do in this session together is sort of identify those 4 areas, those 4 deadly sins where investors tend to mess up. What sort of evidence could help us avoid those things, and what tools, what charts we should review to make sure we avoid those in the future. And I would say, as a hint, it's things like buying too late, selling too early, and there's nothing worse than selling when a stock is up 20% and then sitting on the sidelines as it goes up another 200%. So we're going to look at some examples of where having a more consistent process could have helped us stick with our winners and unwind our losing positions, maybe more quickly, more effectively, more efficiently, and should be a lot of fun. I'm looking forward to it.
Well, great. Look, David, I really appreciate taking some time out to share some of your insights here. Viewers, if you are watching this and you want to learn more from David, he is going to be speaking at that event. It's the Money Show Traders Expo Las Vegas. It runs February 17th to 19th at the Paris Las Vegas Resort. You can look in the description below to find out more and click the link to get details and register for that event. David, hope you have a great end of your year, and I look forward to seeing you in the new year as well.
Thanks, Mike. Happy holidays. I'll see you in Vegas, all right?
Same to you. Take care.